Good morning, children. Welcome back to our new session. Today we are going to learn a new subject that is one of the main subject of our commerce stream, that is accountancy. Before starting the subject, I would like to know why you are selected commerce. Why not science and maths? Maybe you are having some dream in your mind, right? So let's see the importance of commerce. So we know that commerce is one of the popular stream that a student choose after completing their class 10th, right? Commerce streams offer students a wide range of career options after completing their plus 2 that will give them a sense of financial security and make them successful. However, most of the students don't acknowledge commerce subject like science and maths. A student need to have a clear direction towards commerce subject and become successful. Few students can have a positive and suited career in humanities and commerce stream but might find it difficult to perform and achieve well in commerce. The main factor in commerce is the diversity that this subject offers to the students and attracts them to pursue higher education in this stream. If the students are excellent with the numbers and good in examining and dealing with big numbers and data, have a basic sense in economics and finance, then commerce stream is ideal choice for them. While choosing commerce, students have to make themselves familiar with subjects like accountancy, finance, business studies, economics, etc. In today's scenario, commerce has become the most favorable career choice in India. Students should start taking commerce subject seriously and choose the subject after class 10th, isn't it? To help students assess whether they are intended to pursue a career in the field of commerce, its significance, extent, and professions. The segment gives fundamental knowledge of this stream is all about. What is commerce? Commerce as a medium of instruction can be interpreted as a study of business and marketing activities such as the exchange of commodities and services from the manufacturer to the final customer. The principal subjects that are taught in the commerce stream for CBC class 11th and 12th comprise of accountancy, business studies, and economics. Students can choose this field if they have a real interest in these subjects and have an association for the economy, business, and numbers. What are the career options for commerce students? Commerce directly or indirectly is linked with business, isn't it? Especially with the distribution aspect. Commerce helps in creating a proper distribution channel and creates a market for surplus commodities. It has been already proven that good commerce performs an enormous role in the economic development of a country. Some well-defined career opportunities after taking commerce subjects in class 10th are chartered accountancy, company secretary, business management, cost accountancy, etc. However, students after plus 2 can pursue chartered accountancy and cost accountancy courses directly. But it is advisable to take first degree course in BCom along with the computer education to achieve the future goal and make a career successful. Students who deal with numbers easily and find it interesting and who aim to shape their career in financial, economics, and business world should take commerce. So these are the main little bit points regarding commerce and our subjects. Right? Now let me start our main subject, that is accountancy. This is our first class. So let me start. So let me start our first topic, that is introduction to accounting. What is accounting? Accounting is a process. What process? It's a process of recording financial transactions pertaining to a business. What business transactions? Yeah, what financial transactions are including? it including summarizing, analyzing, and reporting like that. Whatever transactions are doing in the business, that we are recording as a book. We are maintaining as a record. That process is called accounting. Clear? Accounting is the process of recording financial transactions, whatever is happening in the business. Clear? The full definition we are doing later only. Now we are going to learn few words that is related with a accountancy. Means every time we have to use these words. So first we have to be used with these words, then only we can do accounting transactions. Right? So let me start. If you are hearing about accounting, what is coming into your mind? Some pictures are coming there. Any imagination is there? Like as business, profit and loss, etc., etc. Right? Yes. Means if we are talking about business, if we are discussing about accounting, first thing is coming into our mind is business. Right? So, for example, if one person started a business, for example, I am starting a business. So, here who is I? I am the owner of the business, right? Yeah, otherwise we can say that Mr. X started a business. Who is Mr. X? Mr. X is the owner of the business. What Mr. X has started? He has started a business. So here in the starting point, we got two words. What is that? Owner and his business. Clear? So Mr. X want to start a business. For starting a business, the first important thing what Mr. X want to do, what he will do, he has to invest some money for his business, right? For starting a business, we need some investment, right? One word, investment. It may be cash, it may be some other things. For example, table, chair means like as furniture we require to start a business. Yeah, we need laptop, yeah, computer system. These all are investment only, right? Starting time we need invest something for our business. So in accounting word, this investment at the time of starting a business, whatever we are investing in the business is called capital. What it is called? Capital. So in simple way, we can say that what is capital? Capital is the amount invested by the owner in the business. Clear? It may be cash, it may be or other things. Right? So simple way, you can say that capital is the amount invested by the owner in the business. So we have completed our first point, that is capital. Clear? Capital is the amount invested by the owner in the business. एक business start करते समय whatever amount we are investing in the business is called capital. Clear? Let's move for our second point. Okay. In first point, we already told that Mr. X has started his business. Then Mr. X is called the owner of the business, right? Then there he has invested some money for the business. So that investment is called capital. That part is over. Now, in second case, Mr. X want to take some money from his business. Maybe he want to take admission for his child. So at the time of admission, he has to pay fees. Right? So for that purpose, he has taken some money from the business. Means Mr. X has withdrawn some money from his business for his personal purpose. That is his personal use only, right? Paying fees, that is a personal purpose. So in accountancy, we are telling this process as drawings. A word we are using there. What it is? Drawings. Withdrawing something for our personal use. If the owner is withdrawing some amount for his personal use, is called drawings. Clear? What is drawing? Drawings are the amount taken by the owner of a business for his personal use. Clear? That is called drawings. So here we know that Mr. X has taken money for his personal use. What was the use? He want to pay fees for his child. So that is his personal matter, right? So whatever amount we are taking from the business for our personal use, that is called drawings. Clear? So we got one more point, that is drawings. Capital means whatever amount we are investing in the business, and drawing means whatever amount we are taking from the business for our personal use. Clear? Okay. So, just to move for our next point. We already discussed that Mr. X has started a business, right? He has invested some money for the business, and that money is called capital, right? Okay. Now, what business Mr. X has started? Let's suppose he has started a textile showroom, right? Then what is the next procedure? He has to buy some material for his showroom, right? Here mainly clothes. So that process is called purchases. What it is called? Purchases. We got a new word, that is purchases. Goods bought for resale are called purchases. This may be in the form of raw material or finished goods, right? Now, Mr. X has purchased some raw material, yeah, finished goods for his business. Now, let's suppose Mr. X has purchased some material from Ram on cash. Means he has paid the money at the time of purchasing material. That is called cash purchases. Clear? Means the purchases can be divided into two. First one is cash purchases and the second one is credit purchases. What is cash purchases? Cash purchases means we are paying the money at the time of purchasing the goods. You are purchasing goods on cash. That is called cash purchases. Now, what is credit purchases? Let's see an example. Mr. X has purchased some material from Mohan on credit. Means he has not given the payment on the time of purchasing. He told that I will pay it after a few days. So that is called credit purchases. Means Mr. X has purchased some goods on credit, some material on credit. The payment is not given at the time of purchase. He has to pay. He will pay later. That is called credit purchases. Right? Now here we can say that Mohan is the creditor of Mr. X. Means Mohan is the creditor of the business. You got one more point there. What it is? One word? Creditor. Right? Creditor is a tension for the business. Yeah, creditor is good for, yeah, advantage for the business. Of course, it's a tension, isn't it? We have to pay. We have to give money to someone later. So it is tension for the business. Right? So that we will talk later. Now we want to see what is a creditor. A creditor is the person to whom a business owes amount against credit purchases of goods, yeah, materials. Right? Means here Mohan is the creditor of the business. Why? Because business has to pay some money to Mohan. Right? Means business has purchased some goods or some material from Mohan, but he didn't pay it. He will pay it later. So that is why Mohan is the creditor of the business. So creditor means creditor is a person to whom a business has to pay the amount against the credit purchases. Clear? So three topics we already covered. Purchases that are divided into two, cash purchases and credit purchases. Cash purchases means purchasing goods on cash, and credit purchases means purchasing goods on credit. From that we got one more name, that is creditor. Creditor is the person to whom a business has to pay the money. Right? Okay. Now let's move for next point. So here also we can say that the business is going slowly and smoothly. Who is the owner of the business? Here our owner is Mr. X. Right? What is his business? It's a textile showroom. In last slide what we have done? We have purchased, means Mr. X has purchased some material on cash and credit. On credit. Right? So after that what he will do? Yes, he has maintained all the records. Yeah, he maintained his showroom neatly. Now what he will do? He has to resale. He has to sell the product. Right? He has purchased some goods, yeah, some material, and now he has to sell it out. That is called sales. That is our next part of the business. This is the main point also. That is why we are doing business. We have to sell the product, then only we will get profit. Right? That is the main motto of business, making profit. So here also, what is a sale? A sale is a transaction between two or more parties, yet two or more people, in which goods and services are exchanged for money or other assets. Here we can say that we are selling clothes for making money. Right? So that is called sales. Now the same ways we told that purchases are divided into two, cash purchases and credit purchases. The same way sales also divided into two, that is cash sales and credit sales. Now what is a cash sale? Same way, selling goods on cash, that is called cash sales. The same way selling goods on credit, that is called credit sales. Right? For example, Mr. X has sold goods to Ram on cash. Means Mr. X has given some material, yeah, some clothes to Ram, and at the same time Ram has paid the money. Right? That is called cash sales. And in another case, Mr. X has sold some material to Mohan, but he has not paid the money on time. At the time of selling, he told that Mohan told to Mr. X that I will pay later. Now here Mohan is the debtor of the business. Mohan is the debtor of Mr. X. D-E-B-T-O-R. But it will not call debitor. It's called debtor. B is silent there. Debtor. So Mohan is the debtor of the business. Right? In creditor, we told that it is tension for the business, right? What about a debtor? Debtor is the advantage. It's a pleasure for the business, right? So what is a debtor? Debtor is a person who owes amount to the business against credit sales. Means we will get the money later. It will come in. Money will come in. In creditor, money will goes out. Right? We have to pay. The business has to pay. But here, debtor means we will get money later. So it is an advantage for the business. What is a debtor? Debtor is a person who owes amount to the business against credit sales of goods or services. Clear? Here, who is the debtor? Mohan is the debtor of the business. I hope clear. Here also we have discussed sales, cash sales and credit sales. Selling goods on cash, that is cash sales. Selling goods on credit, that is credit sales. Then from credit sales, we got one more point, that is debtor. Debtor is a person to who owes amount to the business against credit sales. Clear? In this slide, we are going to discuss about an important principle of accounting, that is business entity principle. Yeah, accounting entity principle. So maybe you are thinking that why we are discussing here this principle, right? This is one of the most important principle, and from this principle we will get our next point. That is why. Let's see. So here, according to this principle, it is telling that the owner and the business are two different persons. Let the owner is a person, the same way the business also let be a another person. Means in accounting या अकाउंटिंग रिकॉर्ड्स में ये मानता है कि बिजनेस और ओनर दो डिफरेंट व्यक्ति हैं, दो अलग अलग व्यक्ति है. Clear? So in first case we told that owner has invested some money for his business, right? ओनर ने बिजनेस के लिए कुछ मनी इन्वेस्ट किया है, बट वो इन्वेस्टमेंट को बिजनेस मानता है एक लायबिलिटी है. वाई? बिकॉज उसका रिटर्न में बिजनेस हैज टू गिव समथिंग टू द ओनर. बिजनेस क्या दे सकता है ओनर को? अच्छे अच्छे प्रॉफिट बना के देंगे, है ना? सो according to this principle, the investment from the owner is the liability of the business. Then instead of that, what he is giving as return? He is giving profit. Yeah, he is making profit for the owner. Clear? Then see what is the entity. Business entity principle tells that the business and the owner is two different persons, and whatever amount the owner is investing in the business is considering as liability, and instead of that liability the business is giving profit to the owner. Clear? See, according to business entity principle, business is separate entity. Entity means party, different persons from its owner. Also, the capital invested by the owner is in the business is a liability of the business towards the owner. So, it is the liability. Whatever amount the owner is investing for his business is a liability of the business towards the owner. So, what is the new word we got? Liability. So, in next slide, we will see what is liability. Clear? What do you mean by liability? Liability is an advantage? No, it's a tension, right? It's a burden. So let's see what is liability, and we will explain detail on liability. Now let's discuss types of liabilities. Liability, we already discussed that it's a tension for the business, right? It's a burden for the business. Means it's a financial obligation for the company, yeah, business, right? And one more point we have discussed that whatever amount the owner is investing for his business is considering as a liability for the business towards the owner. And in return, the business is giving profit to the owner, right? So now we can see that the liability are of two types. Some amount we have to complete, yeah, some liability we have to clear within a short period, yeah, within 1 year. Some liabilities we have completed with a long period of time, right? So here we already discussed that creditor. Who is the creditor? Creditor is the person to whom we have to pay the amount after a time, right? Whenever we are purchasing that time, if we are not given the payment on the time of purchasing, means if we are purchased the goods on credit, so that person is called a creditor. So creditor is a short term liabilities, means generally it's telling that within 3 months we have to complete the payment. It's a general rule for accounting, right? So the creditor, we can say that it's an example of current liability. Now, I hope you have completed, yeah, you have cleared that what is current liability. Current liabilities means if the liability is for short term, that is called current liabilities. We can say that the wages, salary, what we are giving to the employees, that also a current liability. Every month we have to pay, right? That is a burden for the company. So wages is a current liability. Like so many things are there that we will discuss later. Then you can say directly that what is non-current liability? The opposite of that means if it is short term is current liability, then long-term liability is called non-current liabilities. Any example? Yes, if you are taking loan from the bank for a long period of time, means for 5 years, yeah, for 10 years, and all. So that is called current liabilities. Means the liabilities for a long period of time. Clear? So liabilities can be divided into two: current liabilities and non-current liabilities. Current liabilities are short-term liabilities and non-current liabilities are long-term liabilities. Clear? Now just to recollect our today's topics, right? So first point was capital. What is capital? Capital is the amount invested by the owner in the business, right? Second point was drawings. Drawings are the amount taken by the owner of a business for his personal use. Third, purchases. Buying some material from the market for the business. Cash purchases. Purchasing goods and services on cash. Credit purchases. Purchasing goods and services on credit. Creditor. Creditor is the person to whom a business owes amount against credit purchase of goods or services taken. Next point is sales. Selling the products in the market after production. That is called sales. Right? Now cash sales. Selling goods and services on cash. Credit sales. Selling goods and services on credit. Now debtor. What is a debtor? Debtor is a person who owes amount to the business against the credit sales of goods and services. Now, business entity principle. According to business entity principle, business is separate entity, a party from its owner. Also, the capital invested by the owner in the business is a liability of the business towards the owner. Now, liabilities. According to business, liability is a burden for the business. Current liabilities. Liabilities for short period, that is 1 year or less than 1 year. The example of current liability is creditors. Non-current liabilities. Liabilities for long period of time, that is more than 1 year. Example, long-term loan from bank, etc. So here we are winding up our today's session. Okay. So if you are having any doubt, you can contact me. My phone number and email ID both are given in this slide. So you can contact by WhatsApp, yeah, through mail. Your valuable suggestions and comments are acceptable. Please like and subscribe the channel. Okay. Thank you.